Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday is Ryan McCormack, QQQ Equity ETF Strategist at Invesco, to discuss weekly trends in the Nasdaq-100 as we've seen the index pick up a little bit of steam relative to the other major averages this afternoon. Ryan, it's great to see you. Welcome back to Trade Talks.
Thanks, Jill. Good to be here.
And let's take a look at our first chart here. Of course, Wednesday to Wednesday, weekly performance in the Nasdaq-100.
Yeah, so obviously, as you look at the weekly performance, Q is underperforming the S&P 500, which was up 5.29%, and the S&P 500 Value Index up nearly 7%. Year-to-date, Q still holds that around like 22.5 percentage point outperformance over the S&P 500. But this is all kind of around certainty over the election, but maybe more importantly, some encouraging COVID-19 data. As you look at some of the vaccine data and comments by Dr. Fauci, certainly put hope in investors that there's a light at the end of the tunnel here, where we're marching back towards a sense of normalcy and a full reopening of the economy. And with that, we think we saw investors move towards some of these underloved value names, which outperformed for the week.
And our second chart here, if we break it down further by taking a look at the sectors.
Yeah, so I said investors piling into the value side. You look at energy up nearly 15.5% on the week, financials up nearly 9.4%, industrials up almost 7%, and materials over 6%. I mean, these are the unloved sectors that, from an investor standpoint, the full reopening of the economy hopefully will invigorate these types of value names, and I think that's why we saw performance that we did.
All right, Ryan, and take us through our last couple of charts here. We dive a little bit deeper into the S&P 500, the SPY.
Yeah, so just kind of looking at those sector returns, on a different level. You look at the optimism again on Monday, following all this good news over the weekend, and you have energy up over 14% on the day, financials up over 8% on the day, and in that same time frame, you have WTI crude jumping about 8.5%. You have the 10-year rate running nearly 13%, or climbing nearly 13%, excuse me, after a pretty significant move that previous Friday. So, again, that sort of accentuates the fact that these unloved sectors were getting the investor attention that they did. Now, I think to expand it up to that point, these sectors hadn't really participated in the rally that we've seen post-COVID, and certainly year-to-date. And as you look at the year-to-date chart up to that point, you have energy down nearly 50% on the year. You have financials down over 17% on the year. Real estate down over almost 6% on the year, and industrials barely positive. So, these sectors that hadn't participated in this equity market rally that we've seen for the year, I think attracted a lot of the investor attention as, again, this path to normalcy seems to be more likely than in weeks past.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.